In June 2002, 3 months after the funeral, a manager at Very Brothers and Rudd, the wine merchants of St. James's by appointment to the Crown since 1698, opened an envelope from Coutts and Company. Inside was a check, settled from the private resources of Queen Elizabeth II, against an account that had not been settled for some considerable time. The account in question belonged to the late Queen Elizabeth, the Queen Mother. The figure was substantial. It was paid in full. Across London that summer, the same envelope arrived at a florist in Knightsbridge, at a milliner in Mayfair, at the royal warrant holders nobody outside the trade had ever heard of. Some of them were no longer there to cash it. The Queen Mother died £4 million in debt. Her daughter spent the rest of the year writing the apology. This is where the money went. 3 St. James's Street, Very Brothers and Rudd, a Grade 2 star-listed building. The same staircase, the same scales, the same paneled rooms the firm has used since the 17th century. The royal warrant on the door from Edward VII, granted in 1903. The royal warrant from George V. The royal warrant from Elizabeth II, granted in 1952. And the account of the late Queen Elizabeth, the Queen Mother. A column of figures running back 4 decades. A column the firm did not chase. A column the firm could not chase. We will come back to why. But first, the number. £4 million. That is the figure Wikipedia gives, citing the official biography, for the overdraft she held with Coutts at the end of the 1990s. The Daily Mail and several secondary accounts put the total nearer £7 million by the time of her death in March 2002. The exact figure depends on which year you take, which currency conversion you trust, and whether you are counting the bank overdraft alone or every outstanding receipt in every drawer at Clarence House. Take the conservative version, £4 million, a figure that, by the end of her life, was not a number on a single ledger. It was a constellation of unpaid accounts across the West End of London, across Aberdeenshire, across Caithness, across Berkshire. Every one of them an embarrassment that the people owed the money would not, could not, name. This is the story the audience has been asking for. 2 videos, 502 likes spread across 3 comments. The same question every time. If she was £4 million in debt, where did it go? Who did she owe? What happened to them? This is the receipt. This is where the money went. Start with the income, because the income matters for understanding the gap. The civil list payment to Queen Elizabeth, the Queen Mother, in her final years stood at £643,000 a year. That is a public number. It is a number Parliament approved, and Parliament was, at one point, asked to double, then declined. The total had walked up over decades from $70,000 to $95,000 to $334,000 to $643,000. At every step there had been parliamentary debate about whether it was enough. At every step the answer had been to add some more. At every step the household at Clarence House had continued to spend more than the additions. On top of the civil list, the Queen paid her mother. Reliably reported figures put that transfer at least £2 million a year from the personal resources of Elizabeth II. The Prince of Wales added another £80,000 to £100,000. Total annual income in the last years, somewhere between £2.7 and £3 million. In the last full year of her life, she spent £4 million. And here is what made the gap structural, rather than circumstantial. A staff of, depending which count you trust, 50 in permanent service and 100+ including seasonal workers. A wages bill of £2.5 million a year. A wine cellar at Clarence House, valued at around £100,000 in stock at any one time, replenished as it drained. £250,000 a year, by the Daily Mail's figures, on entertaining. 10 racehorses at her death, 6 of them in the care of Nicky Henderson at Seven Barrows in Lambourne, Berkshire, costing more than £100,000 a year in training alone. 5 fully staffed houses: Clarence House on the Mall, Royal Lodge in Windsor Great Park, Birkhall on the Balmoral Estate, Castle of May in Caithness, Walmer Castle in Kent, where she sat as Lord Warden of the Cinque Ports. That is the architecture. 3 million in, 4 million out. Repeated, in different forms, for 40 years. But the architecture is not the receipt. The receipt is in St. James's Street. It is in a Knightsbridge basement and a Mayfair workroom. It is in a stable yard in Lambourne and a tailor's office in Savile Row. And to follow the money to those addresses, we have to talk about the suppliers. Berry Brothers and Rudd. First, because the firm sits at the head of the column, wine merchants since 1698. A coffee shop turned cellar by Widow Bourne in the year William of Orange's reign was settling into its routine. 3 centuries of continuous trading. The first formal royal warrant from Edward VII, granted in 1903. Warrants thereafter from every monarch in succession. By the late 20th century, the firm was supplying the cellars at Clarence House, the cellars at Royal Lodge, the cellars at Birkhall, the cellars at Castle of May. The cases came in by the dozen. The invoices went out by the dozen. The settlements came back, when they came back, at intervals the trade preferred not to specify in public. Veuve Clicquot. The Queen Mother was the firm's largest private client. That is, the firm's own description. Cases of vintage pink champagne moved between Reims and St. James's at a rate that did not match the published civil list allowance. Krug at nearly £300 a bottle by the late 90s. Beefeater London Dry through the 1930s. Gordon's afterward. Dubonnet in the 2-to-1 ratio with gin she preferred. A staff member whose job each morning was to mix the drink. 2 of them before lunch. Veuve Clicquot did not chase. Krug did not chase. The merchants at 3 St. James's did not chase. The bills accumulated. £100,000 of stock at any given moment in the Clarence House cellar, by the Daily Mail's figures. Wine, port, brandy, whiskey. The cellar at Royal Lodge separately maintained. The cellar at Birkhall separately maintained. The cellar at Castle of May separately maintained. 4 sets of accounts at the same supplier, running in parallel, accumulating in parallel. The Lord Steward's office passed the orders, the suppliers fulfilled, the invoices came into Coots. By the late 1990s, Sir Ralph Anstruther's frugality policies were attempting to reduce these standing orders. By the late 1990s, Sir Ralph Anstruther was breaking down. The orders did not reduce. There is a particular cruelty in what a 4-decade wine account looks like on a small merchant's books. The merchant is not, on paper, in difficulty. The merchant has, on paper, an asset, an account receivable from the most prestigious customer in the kingdom. The merchant cannot, in practice, sell that asset. The merchant cannot, in practice, factor it. The merchant cannot, in practice, take it to the bank as collateral, because the bank knows the merchant cannot enforce against the customer. The asset is, in the legal sense, real. The asset is, in the financial sense, dead capital. Multiply that across the West End. Multiply that across 40 years. But here is what nobody outside the trade understood until much later. The rule that made this possible. Look at the Royal Warrant Holders Association's own description of how royal warrants work. The phrase, verbatim, is that warrant-holding firms do not provide their goods or services for free to the royal households, and all transactions are conducted on a strictly commercial basis. That is the official position. Commercial basis. Strictly. Word by word, it is correct. In practice, the architecture of the royal warrant system means that a small London supplier who has built half its prestige around the words, "By appointment to Her Majesty Queen Elizabeth the Queen Mother," has no power to refuse service when the account runs long. The warrant is the marketing. The marketing is the revenue. To chase the account is to risk the warrant. To risk the warrant is to risk the marketing. To risk the marketing is to risk the firm. The smaller the firm, the tighter the loop. The smaller the firm, the longer it can be asked to wait. And the smaller the firm, the more dangerous the wait became. Move to Knightsbridge. To the florists with weekly delivery contracts running back decades, Moises Stevens in Mayfair, founded in 1876. The branch at Lansdowne House opened in 1936, held the royal warrant from the Queen Mother. London's oldest continuously trading florist. Hand-tied bouquets that became the British standard for state arrangements. Quiet customer for the daughter. Reliable customer for the mother. The deliveries went out. The invoices went into the household's accounts at Coutts. Moved to Mayfair proper. To the milliners whose hat blocks shaped the silhouettes the Queen Mother wore through the 1980s and into the 1990s. To Norman Hartnell's old workrooms, the dress designer who held the warrant from 1940 and supplied the Queen Mother for more than 4 decades, who designed the coronation gown for her daughter and the wedding dress for her granddaughter. Names on Savile Row. Names on Bruton Street. Names in Bond Street. Names the audience has never heard, because the architecture of the warrant system meant their names did not appear in the press. Their work appeared in the press. They did not. And it is in this category, the milliners, the dressmakers, the smaller suppliers, that the audience comment with the 191 likes finds its emotional anchor. The comment said plainly that some firms went out of business waiting for the checks. The published record does not name a single royal warrant supplier who went bankrupt directly because the Queen Mother did not pay. But the published record does name something more uncomfortable. The published record names the structural pattern by which it could have happened, repeatedly, and nobody outside the trade would have known. The architecture protected the household. It did not protect the suppliers. And then there are the staff. 50 permanent, 100 plus with seasonal workers folded in, dressers, butlers, chefs, housekeepers, gardeners, ladies' maids, chauffeurs, a watchman who sat outside her bedroom each night with a lamp. The Daily Mail's figures put the annual wages bill at £2.5 million, which is the largest single line in the household accounts. Reports of back pay arriving late at Clarence House circulated in the trade through the 1990s. The names of the staff who waited are not in the public record. The fact of the waiting is. But the staff member whose name we do have, who waited, and whose waiting we can trace, is not at the bottom of the household. He is at the top of it. His name is Sir Ralph Anstruther, 12th Baronet of Anstruther of that ilk, Old Etonian, Coldstream Guards, Equerry to the Queen Mother from 1959, Treasurer to the Queen Mother from 1961. 40 years standing at the gate between the income and the expenditure. The man whose job was to make £4 million of spending behave like £2.5 million of income. The obituary in The Scotsman in May 2002 described him as a courtier noted even among his fellow courtiers for his outstanding discretion. It also described him, in language as plain as obituaries get, as a man pursuing economic policies within the household that were firmly of the 21st century, with frugality the watchword. The phrasing is exact. Frugality, the watchword. The watchword failed. Years after the breakdown, and the breakdown is what it is called, with 2 strokes documented, with appearances at Clarence House in a state of altered cognition, the Queen Mother intervened in 1998. The intervention was not a thanks and pension. The intervention was an instruction. Ralph Anstruther was ordered to go to Scotland, to go to his family seat in Pittenweem, Fife, to stay there. He resisted. He evinced what one of the obituarists called hostility to his replacement, the Honourable Nicholas Assheton, and to Sir Alister Aird, the Queen Mother's private secretary. The man who had spent 4 decades trying to slow the spending was, in the end, removed from the room where the spending happened. Then, he died. 2 months after the Queen Mother, May the 19th, 2002, aged 80. The replacement is the second name that matters. The Honourable Nicholas Assheton, born 1934, died 2012. Younger son of the first Baron Clitheroe, and, before he became the Queen Mother's treasurer in 1998, Deputy Chairman of Coutts. Read that sentence again. Deputy Chairman of Coutts. The man who had been on one side of the overdraft, approving the line, watching it grow, was moved to the other side of the overdraft, managing the household that was running it up. That is not a coincidence. That is the structure of the relationship between the bank and the household making itself visible. When the courtier in charge of the spending collapsed, the household sent for the banker in charge of the lending. When the banker arrived, the spending continued. Which brings us to Coutts. Coutts & Company, 440 Strand, London, where the bank has had its headquarters since 1904. Bankers to the British royal family since the reign of George III in 1761. 2.5 centuries of continuous banking relationship. A relationship in which the customer is not invoiced in the ordinary sense, because the customer is, in the constitutional sense, the bank's reason for existing in its present form. Lord Waldegrave as chairman during the relevant period. A line of business inside what is now the NatWest Group, but trading under its own name, on its own premises, in its own register of customers, for whom the rules are not quite the rules elsewhere. By the late 1990s, the Queen Mother's overdraft at Coutts, on its own, on her primary account, was around £4 million. The figure is in Wikipedia. The source is the official biography. The Spectator reported the same picture from a different angle. The figure was, plainly, larger than the limit any private banker would extend to any private customer of comparable income. The figure was, equally plainly, a figure the bank chose to carry. A figure the bank could carry because it was the bank's longest tenured customer and because the security against the overdraft was not the published income, which was inadequate, but the eventual estate, which was not. The architecture again. The household ran on a public allowance and a private overdraft. The overdraft was guaranteed in practice, if not on paper, by the certainty that an estate of £50 to £70 million would eventually settle it. Coutts was not lending against the civil list. Coutts was lending against the future inheritance of Queen Elizabeth II. That is the sentence the audience has been asking for. Read it again, slowly. The bank that managed the overdraft was, in practical terms, financing the gap between the public allowance and the private spending against the security of the next monarch's eventual inheritance. The bank knew the household could not, on income alone, retire the line. The household knew the bank knew. The Queen knew the household knew the bank knew. And the suppliers did not know, or did not have to know, because the bank's involvement meant they would, in the end, be paid. The bank was the buffer that allowed 40 years of supplier patience. It is a system that requires every party to behave well for it to remain quiet. Coutts behaved well. Coutts did not enforce. The Queen Mother behaved exactly as the system permitted. The suppliers behaved well because the system would have punished them for behaving otherwise. The only person inside the architecture who could not behave well was the treasurer, whose job was to make the maths work, and whose body broke trying. The rumor the brief inherits, the rumor of a banking arrangement beyond Coutts, involving names that float through the secondary literature without anchorage, is a rumor. and the record will not corroborate it. The script will not name names the record does not support. What the record will support is the proper sentence. The Coutts overdraft, on Coutts's own books, carried by Coutts's own management, was the visible mechanism. Whatever else may have existed alongside it remains in the realm of biographer hints rather than documented files. We leave that alone. What we do not leave alone is the summer of 2002. Funeral on the 9th of April. Burial at Windsor on the same day in the King George VI Memorial Chapel, alongside her husband, alongside, eventually, her younger daughter. 200,000 people queued to file past the coffin at Westminster Hall. The country wept. The newspapers reached for the phrases they had been preparing for a decade. The grandmother of the nation. The marshmallow made of steel, in Cecil Beaton's old phrasing. The matron of the Blitz. The accounts were not yet open. The accounts opened in May. The estate process began. The bank statement at Coutts ran for the first time in 40 years against the estate rather than against the income. And the checks began to leave Coutts's premises on the Strand, where the royal family's accounts have been administered since 1904, in the signature of Queen Elizabeth II, or, more precisely, against the estate she had just inherited. The distinction matters. We will come back to it. Through May and June and July of 2002, the checks arrived. Berry Brothers got one. Moises Stevens, the florists, almost certainly got one. The milliners of Mayfair got theirs. Norman Hartnell's archive accounts received theirs. The Lambourne Yard got theirs. The estate at Castle of May, which by then had already been transferred in a 1996 deed to the Queen Elizabeth Castle of May Trust, with the Prince of Wales as president, received its operational settlements. The wages owed to the staff got paid. The accountants began the closing process. The civil list ceased. Some of the checks arrived too late. This is the part the published record does not name in detail, and the script will not pretend to. Small firms had failed in the preceding years. Small firms always do. Some of them had been royal warrant holders. Some of them had been on the Queen Mother's books. The published record gives us the architecture, not the receipts. We know the pattern by which a small Mayfair milliner, supplying one royal household whose accounts ran long, would have struggled to survive on the other customers it could attract. We know the pattern by which a small Knightsbridge florist, the kind whose entire identity was the warrant on its door, would have absorbed the weight until the weight killed it. We do not, in the published record, get a single named firm and a single dated administration filing. What we do get is the structural witness. Sir Ralph Anstruther, after 40 years, breaking down. The Honourable Nicholas Assheton, after 4 years, looking at the same gap his bank had carried for decades. Patrick Kyle, the accountant, reporting his own health declines from the same source. A succession of courtiers and bankers and accountants describing in print what the figures on the page had cost the people charged with managing them. And we get the audience's question, which is the loudest unanswered question in the channel's history. If she died £4 million in debt, where did the rumored $19 million for the grandchildren come from? This is the question with the 181 likes on a previous video. It is the question the maths is supposed to refuse. It is the question that has every right to be asked. And, when you trace the chain back, the answer is sequential rather than contradictory. The Queen Mother set up a trust for her great-grandchildren in 1994. The trust was funded out of her personal wealth at that point, wealth which derived in part from the residual estate of George VI, which had been sequestered separately at his death in 1952, and in part from her own assets accumulated through the long decades after. Wikipedia, citing the Times, gives the figure as approximately £19 million, about 2/3 of her personal wealth at the time. Beneficiaries: Prince William, Prince Harry, Peter and Zara Phillips, Princess Beatrice, Princess Eugenie, Viscount Linley, Lady Sarah Chatto. Tranche payments at the ages of 21 and 40, per the Syndicated Times and Tatler reporting. Approximately $6 million between William and Harry at 21, a further $8 million at 40. Harry turned 40 in September 2024. The second tranche fell due. The trust dates from 1994, 4 years before the overdraft at Coutts is publicly known to have reached $4 million. The overdraft accumulated after the trust was capitalized, not against it. The trust was sequestered from the everyday accounts that ran into deficit. Different vehicles, different addresses on the bank statements, different rules under English trust law. This is the answer the audience has been asking for. It is not glamorous. It does not produce a villain. It produces a structure. The grandchildren's inheritance was protected because the trust was set up before the worst of the spending, because trust law in England treats a properly settled trust as separate property, and because the assets she chose to settle were assets she had inherited rather than assets she had to keep liquid. The Castle of May, separately, was placed into its own trust in 1996, 2 years later, by a deed dated the 11th of June, 1996. That is a different trust again. The Castle of May Trust protected the estate at the head of Scotland, with the Prince of Wales as president. The Great-Grandchildren's Trust protected the cash legacy. The overdraft at Coutts was, separately, the operational gap the architecture allowed to grow. 3 vehicles, 1 household. The audience's confusion has always been that they look like one number with one ending. They are not. They are 3 numbers with 3 legal architectures and 3 different fates. And once you understand the 3 architectures, the deeper question opens. Why did the institution let this happen? This is the through line. This is the thesis the audience has been pushing the channel toward. It happened because the royal warrant system was, by design, a private commercial arrangement that protected royal privacy at the cost of supplier transparency. The official line is that all transactions are commercial. The practical line is that supplier prestige depended on the warrant. The warrant depended on royal goodwill. Royal goodwill depended on suppliers not chasing accounts. Build that loop into law and trade for 200 years, and you produce, in the end, a household that can run £4 million above its public income for 4 decades without a public scandal. The architecture worked exactly as it was designed to. Compare what happens when the architecture fails. Compare what happened when Prince Andrew's commercial ventures, Pichot Palace, the so-called dragons of his own choosing, the trips, the entertainment, outran the institution's ability to absorb them. They became newspaper. They became inquiry. They became, finally, the end of his public role. The Queen Mother's overdraft, equal or greater in absolute terms across her late career, never became a public scandal in her lifetime. The difference is not virtue. The difference is the warrant system. The institution's older, quieter, more reflexive architecture protected her precisely where the newer commercial mode architecture failed her grandson. Andrew got dragged. Elizabeth, the Queen Mother, did not. That is the wider question the channel has been edging toward. The Queen Mother is not the eccentric who happened to run a large overdraft. She is the figure inside whom the institution's older self-protection mechanism was demonstrated, on the largest scale, for the longest run. The $4 million was not a personal failing. The $4 million was, in the precise sense the brief intended, a feature. And the feature had a cost. The cost was not borne by the household. The cost was borne by the suppliers. Some of them survived the wait. Some of them did not. The institution did not record which were which. The institution was not designed to. By the autumn of 2002, The Coutts checks had cleared the worst of the column at Berry Brothers and Rudd. The checks had cleared the column at Moises Stevens. The checks had cleared the wages owed at Clarence House. The checks had not cleared at firms whose doors had closed in the preceding years. There is no register of those firms. There never has been. The architecture did not ask for one. The Queen Mother left an estate of between 50 and 70 million pounds. Under a deal agreed by John Major's government in 1993, that estate passed to Queen Elizabeth II, free of inheritance tax, a sovereign-to-sovereign exemption, originally designed for sovereign-to-sovereign succession, applied for the first time to a person who had never sat as sovereign. The state thereby forgave approximately £28 million in tax. The Scotsman published the figure in 2002. The constitutional law literature has argued the case ever since. £28 million of taxpayer forgiveness. £4 million of supplier weight. £19 million of grandchildren's trust. 200,000 mourners at Westminster Hall. This is the arithmetic of the funeral. This is the column at the back of the ledger that nobody read. The Coutts checks that left St. James's Place in the autumn of 2002 were drawn on the private accounts of a daughter writing the apology her mother had refused to write for 40 years. Some of them reached firms that had survived the wait. Some reached firms that had not. There is no public list, even now, of the suppliers the Queen Mother kept open and then bankrupted. Because the royal warrant system was designed to protect royal family privacy at exactly the cost the suppliers were forced to absorb. The £4 million did not vanish. It was paid, in the end, by a queen who had spent half a century being told the bills were her mother's problem. They were not. They were England's. And England, in the form of a wine merchant in St. James's, paid them.